Okay, so those were some of the headlines that shaped the day of trade on Monday, but taking you through what the market move looked like, tempered through for the day because we opened with cuts of about 0.6%. The market has closed with cuts of about 0.4%, so very nominal improvement coming in from the day's lowest point. Nonetheless, we've been able to hold on to that 24,200 mark for the Nifty 50, and yet it's close to a 100-point fall coming in on an intraday basis. The fall in Sensex is steeper because 0.6% lower is where that index has shut shop for 40 points lower on the spot basis. Nifty Bank, that was one of the top losers of the trading day, a 1% cut coming in, 580 points lower on that index on the back of some heavy pressure coming in on names like Kotak, HDFC, Axis Bank, while on the flip side, ICICI Bank continued to do well on the back of better than expected earnings compared to its peers. If I take a look at what the broader end of the market has done, lots of resilience being seen here, especially in the mid-cap end of the market, because we've closed that index with a gain of about 0.5%, looking good. Small cap has ended absolutely flat, but with a tinge of green on that index. Now, the sectoral tilt today is a funny story because if I take a look at the top losing sector, that's Nifty Finance and Nifty Bank. So a lot of private banks and NBFCs have been under pressure. On the flip side, the top winning sector today is Nifty PSU banks, and we're going to be decoding the move on that one, discussing some earnings reactions and basically getting you a lowdown on the entire sector in just some time from now. But yes, PSU banks were the top sectoral gainer, led by solid moves in PNB on the back of strong earnings. You had IOB, Canada Bank, all of them have done well in trade, followed by pharma, media, energy, metals, FMCG, oil and gas and defense. In that order, those were all the indexes that have closed in the green. Now, if I pull up the Nifty 500, it did manage to end absolutely flat, but the advance decline ratio was in the tilt of the advances. You had names like PNB, JSW Energy, Schneider, Torrent Pharma, Shah Metallics, which again was an earnings candidate and good show on that front. They've held the index higher, but on the flip side, we've seen some pressure on CE Infosystems, Gallant Ispat, E-Clerks, India Cement and CET, and they have kept the entire market absolutely absolutely flat, rather. That's the kind of moves that have come in across the market. And some buzzers, of course. You had some good moves coming in on Sansera Engineering on the back of a Goldman Sachs initiation. That stock has done well. You've got Ultratech Cement that was in focus on the back of a profit beat coming in. Margins were absolutely in line. The EBITDA per ton looked very promising as well. So good move coming in on an Ultratech Cement as well. And that stock has ended the day with gains of about 1.5%. So while that provides you with a lowdown of how Monday's day of trade shaped up, let's bring on board Meryl to give you a better sense on what you should be keeping on your radar for Tuesday's trading session. Meryl.
Right, here are some of the major cues which could be shaping markets on the 21st of July. In India, it's the weekly Nifty expiry, so do watch out for volatility in the markets. While globally, we'll be tracking jobless claims and unemployment data coming in from the UK. And Novartis will be set to report its quarterly results, so do watch out for that as well. Back home, in terms of earnings, we've got Bajaj Auto from the Nifty pack set to report its first quarter results. While in the non-Nifty names as well, it's a major earnings day. We've got M&M Financial, Mastec, Cyan, DLM and many other names in focus. In terms of corporate actions and board meetings, do watch out for Pondy Oxides, where the 21st of July marks its ex-date for a 5:2 stock split. And in the primary markets, do watch out for Alpine Texworld and SBI Fund Management, where both of these IPOs will list on the exchanges. We're also going to be keeping an eye on Caliber Mining and Logistics, which IPO is set to close on the exchange as well. In terms of other events, it's the 59th ASEAN Foreign Ministers meeting, which is going to go on until the 24th of July. So do watch out for that as well. So these are some of the major developments to track on the 21st of July.
Okay, thank you so much for that, Meryl. Let me bring on board Lakshmikant Shukla, Technical Analyst, Institutional Research at Yes Securities, joining us. Lakshmikant, great having you. Let me start off with what you make of the index move today. What can we expect in terms of the rest of the week?
Hi, good afternoon to both of you. Thank you for calling me in your show.
Great having you.
Nifty opened on a cautious note today with the index struggling to extend Friday's breakout about 24,300 level. Weak global cues and a sharp spike in crude oil prices weighed on sentiment right from the open. Despite this, gap down market hold its previous swing low and recover it part of the early losses. Momentum indicator have improved, but on the weekly chart, Nifty is still struggling, still trading within a broader consolidation zone. For the next leg of the rally to materialize, now Nifty need to reclaim and sustain above the levels of 24,300 mark, from where it could extend this journey toward its April month swing high that is placed around the levels of 24,600. Until then, index may continue to remain range bound with immediate support at 24,000 followed by 23,800 as the next key level. Meanwhile, Bank Nifty is also at a crucial juncture. It need a decisive breakout of the levels of 58,700 that could open the gates for fresh buying with upside target of 59,500, and even we can expect 60,000 as PSU Bank started making move on the upside. It has that index has given consolidation breakout on the upside, so we expect this positive momentum in the Bank Nifty, while support is seen around the levels of 57,300 to 57,000 zone. So that would be the strong support for the Bank Nifty till it hold this level, or we will positive. So we expect positive momentum in the upcoming sessions in both the index.
Okay, so that's your view when it comes to the indexes. Lakshmikant, hi, I'm very curious to know what your view is on the Nifty PSU banking index. We've seen some outperformers in trade, the likes of an IOB that has done really well, PNB, Punjab and Sindh, all of these stocks have done well. How are you looking at the index at a broader level? And within the index, what would be some stocks that you're liking?
See, if you look at the overall structure of Nifty PSU Bank, so from last few days, it has been trading on a lower side. And if you look at the last 4 days session, so it is consolidating below its long-term and short-term moving averages. But in today's sessions, it has given congestion breakout of the levels of 8,560 with the formation of bullish belt hold candlestick pattern while reclaiming its 100-day DMA levels. So we expect this positive momentum will continue, and we will see soon further upside in Nifty PSU banks toward the levels of 8,900 with the stop loss of 8,480, where its 200 DMA is also placed. So as long as it holds this support, I think we will remain positive Nifty PSU banks. Among this Nifty PSU, I think the stock like Bank of India, which has formed inverted head and shoulder pattern, PNB already surpassed its previous swing high, and today SBI has given cup and handle breakout from its and surpassing its previous swing high. So I think these are some name which we have to remember for taking long call within the PSU bank space. Even Union Bank is also looking good on the daily chart. It is on the verge of giving falling trend line breakout. So I am expecting positive momentum in all these mentioned name of this PSU bank.
Okay, and very quickly, Lakshmikant, what are your picks?
So as I already told you, I'm quite bullish on the PSU bank. That's why I have picked that State Bank of India, which has recently given cup and handle breakout on the daily chart. Since last few days, it has been consolidating at lower level. But in today's session, the way it has given breakout, so I'm expecting big move in SBI. With the one can keep the stop loss of 1,025 and can expect the target of 1,120. Second stock which I would like to give buy from the auto space, that is Eicher Motor. On even Friday session, it has given falling trend line breakout on the daily chart. And yesterday we have seen some sort of profit booking, but the way it has recovered from its lower level in today's session and maintain its prices above its previous swing low. So here also I am expecting positive move in Eicher Motor. I am expecting the target of 8,000 with the stop loss of 7,360.
Understood. So SBI and Eicher Motors looking good to you. You've gone with two large cap names, Lakshmikant. Good to see you on the show, and thank you so much for your time today. Thanks so much. With that, viewers, it's time to slip into a very short break on this edition of Market Edge. On the other side of the break, we're going to be joined by Gaurang Shah, and he's going to give us a deep dive on how he's looking at the PSU banking space. More importantly, how you should be looking at the space and some stocks that stand out and are worth looking at. We'll take that conversation ahead on the other side of this very short break. Stay tuned. Back back with Market Edge, and before the break we told you that in this segment we're going to be diving deeper into the PSU banking space. So let's take that conversation ahead, given the fact that PSU banks, or rather Nifty PSU Bank, is the top gaining sector of the day. Let's try and decode the move behind that. We've got Mr. Gaurang Shah, Senior Vice President at Geojit Investments Limited, joining us on the show. Gaurang, hi, thank you so much for your time. More importantly, thank you for accommodating our request, and really appreciate you joining us on the show. Let's start by talking about the divergence that we've seen within the financial SPAC today itself. On one hand, you've got the larger names, the private banks that have seen they've seen massive pressure today. On the other side, you've got PSU banks, the likes of an IOB or Canara Bank, for instance, PNB, on the back of its earnings. They've all done so well. Talk to us about how you're reading this move into the market, and then perhaps we'll get a little bit more into detail about the move in PSU banks that we've seen today.
Hi, Snehi. Good evening to you. Good evening to all the viewers now, and it's always a pleasure to be on your show. So, Snehi, the thing is, I think we were discussing, and at Geojit, we always felt, firstly, a disclosure that all recommendations that I'll be sharing with you on your show, Snehi, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So there was a stark, difference between the performance of private sector banks vis-a-vis the public sector banks. But over the last couple of quarters, we've seen that gap, or the distance, has been narrowing because of the catch-up that is done by some public sector banks in terms of reported earnings, be it in terms of asset quality, gross net, be it in terms of recovery, be it in terms of provisioning, write-backs, be it in terms of margins, profitability, etc. While it was surprising, and I was discussing the private sector banks numbers with your colleague and my good friend Harsh over the weekend on Saturday, there has been problem with banks like HDFC Bank. There has been problem with Axis Bank, Kotak Bank. On the flip side, ICICI Bank delivered a stellar set of numbers, and hence we saw almost 4.75 to 5% crack in Axis Bank and HDFC Bank after the numbers they reported over the weekend. The numbers even reported by smaller banks, I don't know whether you had a look at it or not, but IOB, Indian Overseas Bank, reported numbers today, which were also a shade better than what they did last time. Now, I'm not talking about huge recovery, but at least that visible sign of improvement is there. So our sense at Geojit is that you cannot have a bias towards private sector banks. I think now the time has come that you need to have a balanced approach, not only in two parts, but in three parts. On one side, you have private sector banks, select few. On the second side, you have public sector banks. And on the third side, the third angle is the NBFCs. And our sense is that the BFSI universe is going to perform quite well on fallback of couple of counts: steady interest rates and possibly a downward revision as we go into the future, reported earnings, credit demand, and asset quality improvement.
Interesting. Hi, Gaurang. Good chatting with you again. Gaurang, what really stood out for me, when I'm just sitting back and thinking a bit, is that we saw contraction a few quarters ago with regard to private banks in terms of margins. Thereafter, we saw PSU banks margins come down, and we thought we're at the end of that margin drop cycle. That's not really played out. We again saw a bit of a cool off in private banking margins. And in fact, PSU banks have outperformed where margins is concerned. PNB's margins, for example, were much stronger. What's playing out according to you? And do you believe that the bottom, therefore, for PSU banks is done and privates is done this time around in this quarter? What's the sense you're getting?
Hi, Harsh. Great speaking with you again as well. So I think, there was an issue with public sector banks, Harsh, and that was the legacy issue. I don't think that you would have seen this kind of performance had it been for the earlier scenario and the earlier issues that public sector banks were facing with. Now you are having a lot number of capable people at the helm of public sector banks, and these are willing to go out and take that step, which historically public sector banks management were constrained or they were tied down, if I can use that word. Because of the huge change and the shift that has happened, both in terms of change in management, point number one. Point number two, which a big thing that happened, Harsh, was the merger of public sector banks. Yes, there was a legacy issue when the merger happened because of some weak balance sheets got merged into a relatively strong or stronger banks, public sector banks. And because of that weak balance sheet, the stronger bank had to suffer a little bit of negativity in terms of short to medium term. So that particular played out very well. And because of that, I think they got a larger audience or larger customer base or a larger market share because of that merger. On the private sector bank side, Harsh, what I believe is that a little bit of maybe overconfidence, if I can use that word, in terms of, yes, they will keep on growing at the run rate or even better run rate than compared to the public sector banks. And certain banks have been reporting a disappointing set of numbers when it comes to, private sector banks. A case in point, we discussed over the weekend, HDFC Bank, Kotak Bank. I would be eagerly waiting for the IndusInd Bank's numbers to come out. I believe they'll come out with their numbers this week, if I'm not mistaken. So that, and of course, the cost of borrowing and lending, the difference over there. Possibly, I think the banks, private sector banks, which reported disappointing set of numbers, I think this is the wake-up call. Get up and smell the coffee, and you need to get your act right. And if you really want to be in that race and have a sustained growth over a longer period of time, then you need to do a little bit more than what you are doing already. I'm not saying that they are not doing anything, but they need to put in an additional effort as far as certain large cap banks are concerned.
Point taken. Gaurang, also let's just focus for a second and talk about the PSU banking space, particularly that index. The kind of numbers that we've seen from most of the banks belonging to this basket, they've more or less been on the better side. Talk to us about where do you believe the PSU banking cycle is? Are we headed for a couple more quarters of such good growth, or do you believe that this is just a one-off at play and next quarter the tilt could change in the favor of the private banks?
No, Sneha, let me put it this way, Sneha. Look, India has an aspiration to become a large manufacturing hub. We are inviting the who's who in the world to come and set up their shop in India. We are aspiring towards from being a net importer from the world to being net exporter to the world. We are setting up GCC centers, global capability centers. We are setting up data centers. Government has rolled out PLI scheme for multiple sectors, which is going to help. And my only worry is this immediate short to medium term overhang in terms of geopolitical situation and a little bit of concern on the deficit monsoon. I think had these things not been there, Sneha, then I think credit, and I am also of the opinion that credit demand is going to stay here for a longer period of time. So all banks will have an opportunity to complement and coexist with each other, because this credit demand is not going to disappear after 2, 3 quarters or 4 quarters. It is going to stay here for a long period of time. And the kind of capex that companies are talking about, be it in whether it is defense sector, whether it is EMS sector, or whether it is cap goods engineering, I think once the demand picks up at ground level, then most of these companies will start looking at capex. We heard from a couple of automobile manufacturing companies, for example, case in point, Maruti, they are investing in capex because of the foreseeable demand that is going to come, not only from the local market, also from the global market. So my sense is that this demand is going to stay not only for public sector banks, but also for private sector banks and NBFCs. It is only a matter of time for some banks to put in a little bit of more additional effort. So what I would say is, again, with the same confidence, that don't be biased towards private sector banks. Have a balanced approach. There are certain select few public sector banks and strong NBFCs which are likely to do better as we go into the future.
Filter that, Gaurang. How should I pick those, at least on the PSU banking side? How should I pick the ones which are looking good from a value perspective and which could give relative alpha?
So 2 names primarily that come to my mind, State Bank of India and Indian Bank. Of course, State Bank of India, we have yet to see the numbers. Harsh. Indian Bank reported stellar set of numbers. One number that I was very pleased, and I hope and pray that this run rate continues from the PSU Bank, is PNB. You remember we discussed PNB on Saturday, and I did mention that there is one notorious boy in the PSU Bank, and that is PNB. So if PNB has got his act together, and if this is the kind of number that they're going to deliver going forward from here on, then I think, and including Canara Bank, Harsh, even Canara Bank has been underperforming. So if these 2 banks, they get their act together, and if they put in their effort and they have a sustained incremental improvement in earning, then I think these banks would also go get re-rated. But amongst the private sector banks, if I have to name two, though State Bank is not yet out with numbers, but State Bank of India and Indian Bank would be the two preliminary investment ideas.
Does that start to hit a ceiling where PSU banks are concerned, especially on the back of the fact that LDRs have started to get squeezed, right? We've gotten used to seeing PSU banks with LDRs at sub 75. No longer the case. Now we're looking at 85 on the LDR. You believe that that could restrict growth to a certain extent?
I think that will depend upon situation and circumstances, Harsh. I think some banks may possibly face, especially the smaller banks, Harsh, may have an issue. But I don't think mid and large cap PSU banks would have any kind of such issues.
Okay, understood. And thanks so much for your time today, Gaurang. In fact, thank you so much for putting all of this into such good perspective for us and our viewers in terms of how you're looking at the private as well as the PSU end of the banking pack. Thank you so much for your time. But on that note, just revisiting the kind of moves that we've seen coming in for the trading day, 0.4% lower for the Nifty. And yes, that divergence that we've seen when it comes to the financials pack is a very interesting one today. And I'm reiterating this because on one hand, you've got your larger heavyweight, the banking index that has been massively under pressure, barring maybe an ICICI Bank. But on the flip side, just take a look at the Nifty PSU index, through and through the winner in a trade today. And you've got some very good moves coming in from names like PNB. It's almost a 6% uptick on that one on the back of strong earnings. Union Bank, IOB, Bank of Baroda, Canara Bank, Indian Bank, Bank of India. In fact, all of these names that I'm talking about have seen gains north of 2.5%, all the way up to 6% respectively. So looking very good for this pack. The other sector that has done well in trade today has been the pharma index. Now we've got a bunch of approval news coming in on the pharma space globally for an Alembic, a Natco. So that has done well. In fact, Torrent Pharma is up 4.5%. Mankind, Laurus Labs, Lupin, all of them have done really well. So these are just a couple of sectors that I wanted to point out and the way these baskets have done in trade today. But with that, we're completely timed out on this edition of Market Edge. From Harsh, me and the team that put this show together, thank you so much for watching.